Perhaps you keep seeing that the US stock market is overvalued, or maybe you have read Vanguard's recent report that predicts that over the next 10 years, emerging markets are set to outperform the US market. So maybe you're interested in investing in some emerging markets ETFs, and if that's the case, then this is the video for you. Hello, my name is Rachel and welcome back to the channel. In today's video, we'll be going through 5 different emerging markets ETFs that all have very different qualities, different fees, different structures, and one of them might be worth adding to your portfolio. So very quickly, I just wanted to reiterate how very important diversity is within your portfolio, and I certainly wouldn't be going ahead and investing in one of these ETFs in isolation. This would simply form part of my portfolio and certainly not all of it. Even though there is a lot of reports and information and valid information about the US stock market being overvalued at the moment, that doesn't mean I'm going away and selling my US investments. I'll continue to hold on to them. Now, it's important to note that when we are going through the 5-year annualized returns of these emerging markets ETFs, that they will be lower than the 5-year annualized returns for, say, for example, Vanguard's FTSE All World, which is currently sitting at 10.78%, or say, for example, the S&P500, which currently has 5-year annualized returns of over 14%. But what is really important to consider here is that we're thinking more about future predicted performance of these emerging markets ETFs rather than thinking about past performance here. So in Vanguard's latest Markets Perspectives report, which was published in May 2024, we can see that emerging markets are predicted to do much better than US markets. So their model has predicted that US equities will have a return projection of between 3.3% and 5.3%, and that is 10-year annualized returns, whereas emerging markets equities are predicted to have a return projection of 6 to 8%, and that is 10-year annualized into the future. So obviously these are only predictions, so please do go away and do your own research and make sure that you're comfortable with the investments that you're making. But without further ado, let's get stuck into these emerging markets ETFs. So I'm covering 5 different emerging markets ETFs, and they all have very different qualities. This isn't like going away and finding a very standard S&P500 ETF. They are all very different in terms of their fees, in terms of their portfolio structure. So we're starting out with the one that has the highest 5-year annualized returns, and then moving slowly through them, and then finally ending up on the ETFs that have strong dividend returns. So the first 3 emerging markets ETFs that I'm featuring in this video are all accumulating ETFs, which simply means that any dividends are not paid out, they are simply reinvested into that ETF, and the final 2 are dividend ETFs. So the first emerging markets ETF has actually had really strong 5-year annualized returns of 9.54%, which is particularly good for an emerging market ETF. And the reason that it has had such strong returns is because it is a small cap emerging markets ETF. It is the SPDR MSCI Emerging Markets Small Cap ETF. The code for it is EMSM. So the ongoing charge for this ETF is 0.55%, which is a little bit on the higher side. 3-year standard deviation is 11.35. Now, with standard deviation, this is a measure of risk, and ideally, when all else is the same, you are looking for a lower standard deviation. The number of equity holdings in this ETF is 2,058, and the top 3 holdings for this ETF are Asia Vital Components, MSCI Emerging Market Index Future, and Embraer. And as I said, this is an accumulating ETF. Okay, so the next ETF that I wanted to feature in this video is the Fidelity Emerging Markets Quality Income ETF. The code for this is FEMQ, and it has 5-year annualized returns of 4.15%. The ongoing charge is 0.5%, and 3-year standard deviation is 13.41. Now, what is important to note with this ETF is it only has 146 different holdings. So the first one is Hanmi Semiconductor, then Oil India, then China Tower Corp. This is an accumulating ETF as well. So it's really important to note that, as I said, this only has 146 different holdings, which means that you're getting less of a diverse offering of emerging market stocks within this ETF. Okay, so the next ETF is the iShares Core MSCI EM ETF. The code for this is EMIM, and 5-year annualized returns are 3.98%. Ongoing charge for this is quite low at 0.18%, and 3-year standard deviation is 12.84. This has the largest amounts of holdings within any of these ETFs, and it has 3,116 holdings at present, of which the first is Taiwan Semiconductor, the second is Tencent Holdings, and the third is Samsung. So you'll notice from these ETFs that they all have very different top 3 holdings, which is different to what you would see with, say, for example, an S&P 500 ETF, because they tend to be very, very similar. You've got Microsoft, Apple, and Nvidia as your top 3 holdings in most S&P 500 ETFs, whereas these are very, very different. So they are worth looking at closely and doing a lot of research before you decide if you want to invest in an emerging market ETF, first of all, and secondly, which one do you want to invest in. Okay, moving on now to our final 2 emerging markets ETFs, and these, although they have lower 5-year annualized returns, these are both dividend paying ETFs, so they're income generating ETFs, so you will get a dividend either quarterly or semi-annually with these ETFs. So the first one is the Vanguard's FTSE Emerging Markets ETF, and the code for this is VFEM. 5-year annualized returns are 3.45%. The ongoing charge is 0.22%. 3-year standard deviation of 12.60. So they are all quite similar when it comes to standard deviation. And this has 2,149 equity holdings, of which the first is Taiwan Semiconductor, second is Tencent Holdings, third is Alibaba Group, and this has a dividend yield of 2.43%, which is paid quarterly. So our final ETF that I'm featuring in this video is the SPDR S&P Emerging Markets Dividend Aristocrats. The code for this is EMDV. It has 5-year annualized returns of 1.15%, so the lowest of all of these ETFs, but it does have a nice strong dividend yield of 4.37%, and this is paid semi-annually. So the ongoing charge for this ETF is 0.55%, so the same as the other SPDR ETF that I've featured in this video. 3-year standard deviation is the highest of all of these ETFs at 13.85, and what you're ideally looking for is a lower standard deviation when it comes to investing when all else is the same. But as I said, all of these ETFs are very, very varied. The number of equity holdings in this ETF is just 50. So that's the lowest number of equity holdings in any of the ETFs featured in this video. So you're not getting such a diverse portfolio. Top 3 holdings are Realtek Semiconductor, Vanguard International, and then Energisa Energy. I hope I've said that right. I hope you found this video interesting. If you have taken any value from this video, I would absolutely love it if you could subscribe and like this video. Let me know in the comments down below what you would like to see from my next video. The reason I chose to do a video on emerging markets is because I was getting so many comments about investing in emerging markets as a result of this Vanguard report, and also as a result of so much news and information about the American market being overvalued. So I do like to make videos that you like to see, so let me know in the comments down below if there's anything that you'd like to see next. Thank you so much for taking the time to watch this video, and have a lovely day. Bye bye.